Nick. Winning Wednesday.
Yes, welcome to Winning Wednesday with
Tell
Nick.
us a win, Nick. Tell us a win.
Well, there are some wins. The team so far has really picked it up. It's a difficult situation, but they've really been able to, work around some of the changes that have been coming at us wildly. Not only with guidelines, but with appraisals and some of those things. So I have to give most of the credit to them for what they're able to do remotely and how quickly they've kind of picked up these changes and allowed for some of these deals that would have otherwise maybe been held up to think creatively and make them work, in terms of appraisals and appraisal, either waivers or exterior appraisals or whatever have you. um, Verifying employment in creative ways so that, people that aren't in the offices, like we could still, figure out that they're still working. Just a lot of that. And so that's what I've been paying attention to a lot over the past week since last Wednesday, is just kind of, making sure the stuff that we have um, that's really that people are in good shape for still to make sure that gets to the finish line. Um, and
That's great. It sounds like your team just changed the way you looked at things and figured out how, well, if we have to change to do business, what does it need to look like in order for us to do business? And then let's do
correct.
it that way, right?
Yes.
So it sounds like you didn't have a resistant team. They embraced the change, and that's real important. And that's great to know, being that you're our partner, that your people are the most important, it sounds like, and that everybody's really rallied together as a team.
Yeah. Yeah. We've had some of these Zoom meetings as well, and obviously, keeping in touch with each other and making sure that the communication is good and that we're keeping up to date. It's a lot extra work, right, than what we're used to,
Yeah.
but they're doing a great job, and so I give a lot of credit to them for that.
Awesome. I am curious to know, because I asked Allison. Allison is going to be sharing daily with our community,
Mhm.
are a ticker, basically new listings that came on in the last 24 hours, under contracts that went under contract in the last 24 hours and closed, just so we could kind of monitor. It's a ticker, right? Monitor the
Yeah,
market. I'm curious to
like we
know.
do with
Yeah,
rates, yeah,
right. I
on
know
loans.
you really track your numbers, and so my question to you is: are you in new applications? What are you looking at? Are you seeing any new applications? Is it down by 80%, 90%, 50%?
Yeah, so we've seen something. We've seen a steady slew of applications from refinances, although there's been some challenges, as I'm sure you guys have heard, from rates being a little bit more volatile. They're still in the threes, but they can still bounce around a little bit. So that's been pretty steady. The other side of it is the purchase applications, which I thought would stop completely or at least be delayed, for some time. But we've seen some of those still come through, and obviously they have their delayed dates and COVID agreements, addendums that it does. That's the other like positive side to this, is that um, agents and us mortgage people shouldn't necessarily just, even though we're staying in place in our houses, we shouldn't be staying in place with our business. And there's a lot of opportunity to get people ready, get them pre-approved, to because now it's more important than ever to make sure that you have someone that really goes through the detail, and makes it like a real advisor would, like a financial advisor. The mortgage advisor has to really kind of break things down and to make sure that, hey, that this loan is going to be good for them, that they're not overextending themselves, that they're not necessarily, there's no more shortcuts. It's not more one size, fits all. Not that it ever was with us. And I think that that's what is really strong about what we do. We really take the time to do that. But that's really been where we've seen a lot of a lot of changes where we can have the time, make the time to set these people up, because everyone's home. They still want to go out and buy houses. Maybe there's there's showing problems and obviously no open houses and things like that. But I see this as our market is essentially just taking a pause, and it's going to be pushed over. Further, I do see that one of the real bright sides that I keep thinking about, maybe because I'm an optimist in this case, is that even if we see challenges from in the economy, that might end up being what we needed to actually have to get some of these sellers off the fence, either by force, maybe they need to leave because their situations have changed, or they're just tired or fed up with where they are and they want to move. And that might actually end up bringing into balance the buyers and sellers that have been skewed over to sellers because of low inventory for so much time. So as challenging as this market is right now, I can't help but think that there is a lot of opportunity. And so when you're a mortgage person or an agent, I mean, what are you going to do? You're just going to sit here and wait for that stuff? Or are you going to try to do your, virtual home buyers, virtual home tours? You're going to try to talk to and engage with as many potential clients of the future, even if it's not the right time, even to just get them ready for it, because it all then fall for us, in 2-3 months, because eventually we're going to see the tail end of this. And then it's like, okay, well, do you want to see the tail end of this with a full pipeline of potential clients, or do you want to start from there and start from scratch again?
So I think you were almost saying seminar instead of buyer seller or something, but a seminar would be great. I think I'd actually like for you to even do one for us, because think about this: when you do a buyer seminar, a home ownership seminar, investor seminar, the people that are coming through the door for that are probably a year out from really taking action. 6 months to a year out. It may not even be something they do in the 12 months. It may be something for future. And so when you do those kinds of seminars, the goal is to just create more, add people to your database, and then be able to create referrals from those relationships. So, and that may yield some now business while you're we just got off a call before, but Megan was on it, and we were talking about cultivating those leads that come through. So I'm just thinking right now, maybe that would be something wise of us to do, would be to educate our buyers on process and a buyer seminar during a time like this. What do you think?
Yeah, I mean, a virtual seminar would be great, and I think that based on what you guys have done with Command and Keller Williams's model of how important database is, because we know it's crucial to our business at Get a Rate, and we have state-of-the-art CRMs, and we stay in touch with our clients from the beginning, depending on where they are in the process, whether it's 6 months, 12 months, or 1 month. And so I think that now more than ever, that's important, because.
Well, Nick, if you didn't have a database, what would you be doing right now? Like, who would you actually have the opportunity to connect with? I mean, you could start from scratch, so I don't want anybody to think that they can't create a new sphere at any time. We were actually talking just a few minutes ago, Matt and I, about a guy who had no sphere and came into a market and was able to create it through video content. However, that's not typical.
Yeah.
And so that we know database is everything.
Yeah, I mean, even if you started, let's say you had nothing today. I mean, if you're not busy just showing houses physically, how much more time do you have to reach out to people when they're home? Maybe they're not working the full 12 hours a day. I understand everybody works and family and all that stuff, but they're also home. They're also looking online at real estate. The one thing that I thought would really get some buyers is excited is, you get them excited, even though you're staying in place right now. Maybe they can't see the houses that they want, but you get them excited for what the future could be, because you can say things like, maybe you can't, buy right this second, but when we come out of the tail end of this, there might be more houses on the market. You might be in the perfect situation to be in a buyer's market when you're already pre-approved. The agent we've already figured out your laundry list of what you need in a home. All of those things are kind of set so that once, you find something, you might be in a better position to buy than anybody else.
Absolutely.
And
Nick,
so it's like anything. Do you want to be prepared for that, whether you're a buyer or an agent? And in this market as an agent, you want to get in front of many people so you can start from scratch right here. Because I mean, what else are you gonna do?
so Nick, I wanted to ask you a question that had come up, I believe, on one of our calls on Monday with when we had one of our office Zoom calls. Jamie Simon had asked a question in terms of like people who have lost their job, or not lost their jobs, who might be temporarily like furloughed or
Furlough.
temporarily without a job. And she was saying that she had been hearing like mixed things in terms of how that would impact a mortgage or somebody who's already in the process, what that would do. So do you have any insight in terms of how that affects somebody who might be like temporarily out of a job for 2 months or 1 month, and how the language matters there?
Yeah, the language does matter. The furlough, and I mean, layoff is the worst. Furlough does mean they are not being paid until they can come back. So there's two things that we're looking for. One, that they are back and able to work and get paid, even if that is like right before closing. And I think that's to protect everybody, because they don't necessarily guarantee that they're brought back from furlough, although they, I think that is a strong possibility, depending on the industry, though. There are more industries that are a little bit more difficult than others. If someone is a union construction and they're maybe not technically working because maybe they're not essential or something like that, you're probably more than likely that they would be brought back. But certain smaller maybe restaurants, I don't know, that does become a challenge, and that's part of why I congratulated. I mean, I'm praising our team because there's a lot of common sense. Look at this. Does this make sense for either of us, either the buyer or the seller? And in some cases, you have two incomes on a loan. Maybe the furloughed person is not the primary income, and the loan can be restructured. So this is what I mean by the creativity and the hard work by strong mortgage loan originators and their supporting staff, is that you got to look at all of this and stuff, and then maybe it could be restructured where, hey, they're probably going to be brought back, but maybe we don't need the income. There's some ways to do that, and then further with the people that are kind of working from home, that's a lot easier. You just kind of get in touch with someone via email or something that can just say, yeah, they're just working remotely, which I think is a lot, but a lot of people aren't, so we have to look at those on a case by case. And that's probably why you get some mixed.
So do I hear you correctly saying that if you do have a case where somebody's furloughed and they are, it is imperative that they're on the loan, that you probably won't close until they go back to work?
Correct. Yeah, because the furlough, it's hard to determine that they're gonna be able to collect a paycheck when, if and when, because it's indeterminate at this point.
Okay. Something else that came up in some conversations this week, that people making silly assumptions on whether or not their mortgage company is allowing them to not pay the mortgage and choosing to maybe not pay the mortgage, which then, I'm sure there's a sector of our communities that are just going, I'm not paying because I heard this or that, and they haven't called their mortgage company, which we suggest you to call your mortgage company and have a conversation with someone to make sure that you can apply, to make sure that you are eligible if you are in a hardship in this. However, do you think that this will create some distressed properties in the future?
Yes, I do. The important part is, what I hope that most people understand is that if they are in a financial situation where, you know, it's really an issue for them, that they are the ones that need to reach out to their lender, to the servicer, to speak about the options, to really take the time to understand what those options are, whether it's just a forbearance and when those payments are due, when that, you know, loan modification. There is some guidance on this that has come from federal and state regulators, although in practice it has not been completely defined about how it's supposed to do. Like the New Jersey State Department of Banking and Insurance has provided guidance that says, hey, work with the buyer, with the borrower, if they've experienced financial hardship, to try not to, you know, ruin their credit, to work with them on, you know, a payment plan or something, you know, where they can forego maybe some of these payments, but, you know, work with them so that it's not all due at once, because that was the other thought of this, is that, you know,
Or more of a modification instead of
correct.
a deferment.
Yeah. But some of this stuff, if the job doesn't come back for certain people, this is going to create a distressed property situation and sale, which is why I think that some inventories might increase, and that is part of the challenge of this, and that's one of the major reasons why rates haven't been lower and they've been more volatile, is because investors, the entire secondary market, whether you're the biggest of the big or smaller guys, they're expecting a huge swath of delayed payments that they are responsible for to their investors, to the bondholders, and they need to front that money. And so what they've done is they've artificially, I think, kept rates a little bit higher so that they can ease that transition, because you don't know how many people there are exactly that will apply for it. But the rules that were set forth first for the homeowners by Congress and stuff haven't been clear on what exactly is a financial hardship, whether or not you have to prove it. And so it's created some volatility and fear in the secondary markets. And investors are keeping rates a little bit higher than what they should be. Now, are the rates still good? They're fine. I mean, the people that want to buy and can refi, I mean, there's still tons of opportunity. But from day to day, they can swing a little bit. And I do see that if we can resolve that part, get past this, we'll see rates come down. The longer term, you know, the things to deal with is whether this turns into distressed properties, which goes back to my part of this, is like, hey, you could look at that as you know, on that side, which is terrible for certain homeowners, and we're in for an issue there. But on the other side, it's like, okay, well, you know, it does leave room for more properties to come on the market and to, you know, maybe level off some of the buyer and seller inequalities that we've had in supply demand over the last certain amount of years. And I mean, I think that if sellers see prices start to tick down, maybe they'll be more willing to sell, instead of thinking, why should I move? You know, my value's been going up 3-4% every single year for the last 10 years.
Well, and so it's through conversations that Matt and I are having with so many different people over the last couple of weeks that it's been giving us some clarity on what is the market of the moment, and we're actually getting to that part in the book of our Shift series. But it's really important for you and for our agents, for all of us, to understand who is our audience, what's the most lucrative audience that we could be, you know, trying to capture, rather than go after everybody. Because it's like when we're coaching our agents and we're asking them to choose a farm area, choose an area where they want to, you know, get to know those houses and take some market share in that area or town. You're not going to choose a town or an area that doesn't have much turnover. When I was an agent, I remember taking on an amazing complex. It was Nicholas Farms. It was only 2 streets and 12 houses. And over the years, I think only like 4 ever changed hands. So it wasn't a real big expense. And I always, if I could have one of those houses in there, but there really wasn't any market to go get. And so I just do want our agents and our partners to just get clear on where should I be focusing, where should I put my effort and energy, what sector of our market will be needing my help the most when we get out of this, through this, and what should my message be. And I think through conversations with you and others, it's been really great to just kind of have these hypothetical, situations.
Yeah, I mean, in terms of like price range, I think that if people are, the typical price range between the 300 to the 750,000 mark is going to be key, because that's where most of the money and lending is going to be. It's going to get really difficult above that in certain instances,
So
because
jumbo loans are going to be
jumbo
out.
loans, they're not out, but they're going to be
Yeah.
tightened up, and it's going to be harder to get some of those. So I think that the middle market, which is our bread and butter, is definitely something to do, and maybe those areas that are just that have a decent amount of normally medium priced homes that you'll start to maybe see more opportunities to buy and sell in.
I like it.
Wayne,
Yeah.
Wayne,
Yeah.
Clifton, all this towns.
So what are you doing to generate new business for yourself?
So most of it, well, obviously reaching out to the agents and seeing how they're doing and supporting that. The other side of it has been our database, just sending out. We've done a lot of marketing over the years to obtain lead sources for purchase and refinances throughout, online from a variety of different sources, and that has really helped us obtain new business, because we have huge, marketing emails that like drip campaigns that basically stay in touch with these people and then get them ready to pull the trigger when whether they're buying or refinancing. And so that's been really helpful when you physically can't let's necessarily go outside or talk to people. So it's really been a lot of this, not Facebook Live, but Zoom stuff, and then just for me also, it's been a lot more supportive of our back office in the last week, because of all of those things that I had mentioned earlier. So it's kept me busy from hour to hour. But I've reached out to some agents. I mean, I know the one thing I didn't that I know is that Zillow cut their lead costs by half, or they cut their invoices. So if people still, this might be a good time to get, like when we talked about getting them in the process or getting them excited. This might be a cheaper way to get in the door with some leads, or at least to keep their marketing going. So that's been something else that we've kept going too, like Zillow marketing and some of the Zillow leads and some other providers. But that's been really good.
We have commands, Nick.
Yeah.
Have you
I know you. But you use command to get some of those. Yeah, I know you guys have command, but those sources come from somewhere, right? Whether it's Ylopo or Zillow or any of these number of lead aggregators that you put them into command, and then you can have something go out to the client.
Have you noticed any of your systems changing now that you've been homebound? Have you noticed anything that you've been like, now that you have time to actually tweak some of your systems? Have you tweaked any drip campaigns to cater more towards the now, or have you noticed any changes in any of that?
Yeah, my partner Michael does a lot of that. He's been focusing on our social media, the marketing drip campaigns, making sure that we have a good mix of lead sources from different online. I don't know if you guys have ever seen it, but GetArate has a really cool banner ads and retargeting. Like if you ever went to getarate.com and then you went anywhere else, we follow you around.
Yeah, we follow you.
We follow you. So that's been really cool. And so that I'm really proud of him for all of that, because that's not an easy thing. It's not an easy fix. There's no shortcuts in our business. Or maybe there is, but we just haven't taken them. The last 10 years have brought us to this point. And even though we couldn't see this exact moment, we did all of those right things that got us to say, wow, we can all work remote. We have a digital mortgage solution. We have ways to interact with clients, remotely. We have good rates. We have a marketing reach that's second to none, I think. And it's kind of put us in a decent position to weather the storm and support, our partners, because that's what we.
I think you've had such a great setup the way KW, like, all roads led to now, and I think both of our companies, which is why we're such a good partnership, have really prepared our people for what is now. And I know that you probably had the same with us, some agents and staff resisting the technology being such a big part of our business now. And I mean, they have to embrace it, right?
We talked about that. I think we talked about that last time.
Swim right now.
Yeah, we talked about it last time. Some of this stuff is going to stick, and it's because it's forced on people, and it's gonna stick. That virtual home buyer, the workflow. That's gonna, that was something that I think that a lot of agents and brokerages, not you guys, but were resistant to, because they always thought that this is the way that it's going to be. But some of that is really going to stick and change our business. And I just think that some of that is better, because if you could reach more people with a virtual home tour, why would you want to show that house, 10 different times to 10 different people when you can, have them make offers or reach out to you and then you show them more?
Exposure is the name of the game when you're going for marketing, whether it's for mortgages or for home sales. If you can get your message out to more people, your offer is in direct proportion to the amount of people that come through that house, whether it's virtually or physically. And we see this in prospecting. We have agents that won't go door knocking because they know they can hit 10 calls before they walk to one door, and so they just want more at bats. And so why not put ourselves and use the platforms that we have to get our very important messages out to even more people? So
I mean, an open house with a virtual tour can be the same as a real house, because you can essentially make the sign up to that virtual open house with a lead capture form, and then you have the same thing that you would want from an open house. Maybe you don't have the face-to-face, but you can easily do the face-to-face like we're doing now.
Mm-hmm.
Right.
Awesome.
All right.
Well, thank you for coming on again today. This was very informative, and I hope our audience, now that it was on Facebook and on Zoom, got a little extra. So we'll do this again next Wednesday at 1 p.m.
Yep,
Sounds good.
Wednesday.
Thanks, Nick.
Thank you, guys. Happy to be here.
Bye.
Be well.
Thank you, you too.